I wanted to talk about Broadcom. They announced their earnings yesterday, and the stock price is sold off. It's Friday morning, about an hour and 15 minutes before the market opens, and the stock is down 7%. What was in the earnings that caused investors to sell? Well, it's been my observation that Broadcom stock has been very high, fueled by the AI hype that the data center is going to explode with new revenues and make semiconductor companies very, very valuable. That's certainly been the case for NVIDIA, as well as other companies that have been benefiting from the data center build out. But I'll show you in the information that Broadcom provided that Broadcom's growth is actually quite slow. It's not booming, it's just growing like you would expect them to grow. Whether you put an AI label or not, the results were just lackluster. They were just okay. And I think that's why the stock price is really down this morning. So I'll go through and update my analysis on Broadcom. It is a company that I've been an investor in for a long time. But more recently, I started to short this stock because I think that this stock price is just much too high for the value of this company. Now, Broadcom's a great company, but the company is not the stock price, and the stock price is not the company. This video is really focused on the stock price. I'm an investor and I invest to make money. I don't invest just because I want to own a part of a company just so that I could say that. No, I own a company so that it could go up in value and I make money. In the case of Broadcom, I think the value is too high. And I think the stock price is going to drop. Over time, I think my short position is going to make money. So I'll go over my short position on Broadcom, share with you where I'm at, what my plan is to get out of the short position. I'm not going to stay in it forever, and what the guardrails are that I put on that position. So let's get into analyzing Broadcom. So the stock price has done really well. Over the last 5 years, it's up 423%, which is phenomenal. Great job, Broadcom. I've owned Broadcom for a long time and sold right around the end of 2023 at a really nice gain. I don't regret doing that because I, again, think that the stock price is too high compared to the actual value of Broadcom. But the stock price continued to rally, and over the past year, it's up well over 38%. If we look at the monthly, it hasn't fared very well. It's down quite a bit. It's down 8.88%. That doesn't include the more than 7% it's down this morning. So it's going to be down about 15% shortly after the market opens. That's clearly in correction territory. And I sense that it's going to continue to fall. I'll share more of my analysis with you that leads me to make that statement. Broadcom has a market cap of $711 billion, which is a huge market cap for a semiconductor company. They're a $46 billion company. And if you look at some of their peers like Qualcomm, they're almost the same revenue, but their market cap is much lower. We look at PE, has a very high PE of 139. It's a strong buy according to analysts, but it's only discounted by 17%. I don't know how you could say strong, but it's only discounted by 17%. It's a strong buy and it's discounted by 70%, but that's interesting. Overall, as mentioned, the stock is really up, which is interesting, but more recently it's really begun to drop and it's seen a lot of volatility. The whole semiconductor space is really being pressured. Now, what I'll show is that the revenue has really, if you look at it to the naked eye, the revenue looks great. They have really high growth on the revenue. But the thing that I want to call attention to is they acquired a company, VMware, and that's really led to the big percentage growth. It's not organic growth. And in my book, organic growth is the best type of growth. That shows that customers really like your product. They are buying more of it. And new customers are being attracted by your product or service. And that is also a real positive. When you acquire a company, it might be a real good thing, but it's not organic growth. And in fact, they had only 4% organic growth if you take out the VMware business. And that was reported by Broadcom themselves in the latest earnings. So it's very good that they provided that so we have a clear picture of how the company's growing. So really, I view Broadcom as a 4% growing company, which is a very different reflection on the company versus 32%. When we look at cash flow, it's a very good cash flow generating company, but my comments that I mentioned on that acquisition continue to linger here. Nonetheless, the reason I've been a Broadcom investor in the past is their cash flows have been really good and they are very attractive, but they only provide a certain valuation, which I'll show later, and compare it to its current stock price. The balance sheet's gotten better. They were above 3 times EBITDA, but they've done a nice job of paying off debt and bringing down the debt level so it's below 3 times EBITDA. Good job on that, Broadcom. Now, I believe Broadcom is being priced at a premium of 43%. If I look at their stock price, and that is the stock price that I'm seeing before the market opens, that is the lowered stock price the market's pricing, and compare it to the value that I see in their cash flows and the value I see out of their earnings per share. Cash flows are very, very good. And I think I've created a fairly accurate and optimistic forecast cash flows for the first 4 years and growing those cash flows by 6%. And then terminal value growth by 4%. This is a cyclical industry, and this is an optimistic forecast. But I want to be optimistic since I'm shorting the stock. I don't want to make the numbers look better for a short seller position. I want it to look very optimistic just to make sure that I'm not shorting a stock that's going to come back and cause me a lot of losses. The discount rate's 9%. And you know what? Let's change that on the fly. Interest rates are dropping. I'm going to change it to 8.5. Broadcom's done a nice job of improving their balance sheet, and I think they deserve a lower discount rate. The intrinsic value of all those cash flows is $432 billion. And the cash on the balance sheet's a little under 10 billion. Debt's a little under 70 billion. So the equity value of the company is $372 billion, but the market cap's much higher. So when I compare the current stock price to the value per share that I calculate, based on cash flows, the stock is being priced at a premium of 43%. Earnings per share is similar. Now, analysts are going to use a very high PE. That's fine. They can do that. But when I invest my money, I'd make the decision on the PE. And I think an 18 is reasonable for a semiconductor company. Having said that, I'm going to grow the earnings per share quite aggressively. And I get to a premium being priced into the stock of 29%. So the combination is a 38% premium on the price of Broadcom stock, which is interesting and information that I'll use as I update my short position. I began to short shares of Broadcom over the last few months, and overall, I am at an unrealized gain of 12% on that short position. And you likely know when you short a stock, you're actually borrowing shares and selling them. And I did so. And I borrowed shares and sold them. And the proceeds from that sale was $5,239. Now, I owe whoever lent me those shares. I need to return those shares. Now, if I were to buy them today, they'd cost me $4,666. So I would stand to make a gain of $573 if I closed out the short position today. Now, I think this is going to continue to drop. I think the semiconductor space is certainly on its way down. And I'm going to really think about buying shares and closing out this short position if it reaches 20%. And at that point, I think I'll be satisfied with the return. Again, this is achieved over the course of a couple months. And more importantly, I was seeing that the semiconductor space was just overpriced, and it seemed obvious to me. I also have been working in technology for a long time, and I've seen these paradigms of technology get established, and get working. AI is really interesting, but it's just going to take a lot longer than the media outlets would lead you to believe. It's not going to happen overnight. It's not going to happen over a couple of years. It's going to happen over a decade. And the data center, I think we've proven that if, in fact, the data center is growing by leaps and bounds, Broadcom revenue organically should be growing maybe 25%, 50% a year. Instead, it's just growing 4% organically. So there's no boom there. I don't see it. So having said that, having a short position, I put capital out there, make this a real, investment, make this a real thought and a real position I'm taking to confirm my thesis. Or frankly, if this turns around and I lose money, maybe I get to learn a lesson out of this investment. Let's see how things work out. Broadcom is a terrific business, and I've been an investor in the company because I think that they have certain intellectual property that's really desirable by the market. They are a fabless semiconductor, so the real value is providing the engineering, the creativity to create the right semiconductors for the market. So I think the company's great. I just think that the stock price is much too high. So I separate the two because I really do believe Broadcom's a great company, but I think the stock price is a different matter. So I put them in my desirability quadrant, put them mostly in the green. I think it's a really good company, very profitable, generates cash flow. And at some point, maybe if the Broadcom stock really goes down in price, I might start buying the stock again versus shorting it. But for the time being, I'm going to keep my short position open. I don't think I'm going to make it any larger. I think we're on our way to correcting, stock prices in the semiconductor space. I'm just going to wait to probably close out the short position in the next couple months. We'll see how quickly we get there, and we'll go from there. So that's my video on Broadcom. I hope you found it interesting, and I really appreciate you watching. Keep in mind, I'm just an individual investor, just sharing my experience on YouTube. I'm not recommending you short Broadcom. I'm not recommending you buy, hold, or sell Broadcom. Please make your investment decisions independent of this video. Thanks again for watching.